Hi, everyone. Welcome to the last Carson's Take 5 of 2024. Ryan and Sonu here, recovering from the holidays. Sonu, this one will be a fun one because it's a question we get a lot. We're going to talk about three potential worries for 2025. Very quickly, though, how were the holidays for you guys? I know you're down in Florida.
No, it was good. There's not too much sunshine, but it's still warmer than it is in Chicago. How about yourself?
That was all good. Yeah, busy. I mean, we're recording this the day after Christmas, so we're kind of beat up in the Detrick household. Had a lot of fun, but it's right.
Now I know why it's called Boxing Day.
Yeah, there you go. That's a good point. That's true. So again, welcome everyone. Thank you for listening to so many of these. This will be the final one of 2024, but we will continue to do them next year as we get into 2025. So let's just dive in. There are three. There's lots of worries. There's always something you're worried about. The three we're going to talk about, three that we have kind of on our radar, right? It doesn't mean these are going to pan out. We'll be very clear, but these could upset the bullish thesis, the bullish apple cart. First off, stocks are up a lot the last couple of years. That's a potential worry this year. They might not be up again. The third one, tariffs and the U.S. dollar. Kind of combine those two. We hear about tariffs all the time. We know those are worries. That's there. And then higher interest rates. I mean, the Fed started cutting in September. Rates have gone like straight up since then. So we're going to talk about those three things. Let's start with the stock market. I'll try to dive in here. S&P gained over 20% last year, 2023. On pace, they're going to take a major sell-off, but on pace for back-to-back 20% gains. Right there. That tells you, back-to-back 20% gains. Maybe this year's not quite as strong, or I should say next year, 2025, not quite as strong. We don't think it's going to gain 20%. We wouldn't complain. But I will say this much, Sonu, when we looked into it, when you have back-to-back 20% gains on the S&P, like we do, we're going to have right now, that next year has been higher 6 out of 8 times, so about 75% of the time, with about a 12 to 13% average return. So again, it's not up 20%, but a low double-digit return, maybe more volatility. One final comment, I'll go to you. This past year, by 2024, most we saw was a peak to trough correction of 8.5% during that really violent, scary time we saw back in August. Most years tend to see a double-digit correction. So maybe we see a double-digit from peak to trough correction at some point in the year. Honest to goodness, everybody, plan for it. Plan for a double-digit correction sometime during the year, and we're probably due for one. I wouldn't be shocked at all if we had that. But when all is said and done, we're not going to give away kind of our outlook yet. The low double-digit returns in 2025 still makes sense. What do you want to add there, Sonu?
No, look, momentum begets momentum. I always talk about that. So you want that. You don't want negative momentum going into a new year. You want momentum with the, Santa Claus rally and, positive seasonality, November, December, January. Hopefully we get that.
Yeah.
But at the same time, something we've talked about is a lot of bears throwing in the towel. Yeah. Right? Sentiment is a much more positive thing. And, wait a minute. If everyone's thinking alike, as you always tell me, or as General Patton said, maybe be careful, brace for some volatility here.
Mm-hmm. Yeah, no, well said there. We still think it's a bull market. We still think they're solid. Maybe we don't quite gain 20% again, but a worry is, again, stocks are up well over 70% off those October 22 lows. One final little cherry on top. Third years of bull markets usually are just kind of choppy, right? The first and second years of bull market were really strong. So maybe a little choppy potentially, but when all is said and done, we still think we're going to have some decent gains in 2025. That's one potential worry, up too much. The next one, this is kind of the one maybe the most close to a lot of people's heart with what's going on right now, potentially higher tariffs and what that could do to the U.S. dollar. Let's just remember, a strong dollar is usually a risk-off scenario. The first 10 months of 2022, when stocks did horribly and bonds did like the worst they've ever done over a extended period of time, that was terrible time for investors, really good time for the U.S. dollar. So, Sonu, talk to me about a stronger dollar and tariffs and how it all plays out as a potential worry in 2025.
One thing with tariffs, everyone's talking about tariffs since, President Trump, President-elect Trump, is coming in. He's said tariffs are his favorite word in the dictionary as well.
Okay.
But look, the reality is we don't know if this is a negotiating ploy, what it is. I mean, is incoming Treasury Secretary Scott Bessent's talked about tariffs being a potential negotiating tactic rather than, something that they'll just do across the board without thinking too much about it. But still, even with all that said, we don't know, whether tariffs will come in the first place, what sort of goods tariffs will be imposed on, which countries' goods tariffs will be imposed on, how much tariffs, right? When the tariffs will come on, it's all uncertain, right? Now, the other side of it, though, is that the dollar is going up in some anticipation. We'll talk about interest rates too. That's also part of this. But the dollar is going up, I think, partly in response to potential tariffs. Potential, right?
Yeah.
We don't know what's coming yet, and nobody knows. But the dollar is sort of front running that, right? What does that mean? If the dollar goes up, that makes that sort of negates the impact, the inflationary impact of tariffs, right? But the dollar has risks too. A strong dollar means, that hurts U.S. manufacturers, that hurts U.S. exporters. It makes the cost of our goods, U.S. manufactured goods, more expensive for the rest of the world, right? On top of that, you have slowing growth abroad, whereas growth is strong here. So that's a headwind already for U.S. exporters and manufacturers. And then the U.S. dollar is, I think, a headwind for company earnings. I think more than 40% of revenues from the S&P 500 come from outside the U.S. So if the dollar is stronger, that means revenues in local currencies are going to be smaller, right? And that's a headwind for company earnings. So I think some of these things are the risks we think about when the dollar is stronger. And we don't think it's going to go that much further. But, right now there's a lot that's uncertain. Right.
No, exactly. If the dollar does strengthen more, that's a worry, right? I mean, again, that could be a sign something's going on there. And let's just remember in 2018, 2019, right, when President Trump brought on a lot of these tariffs started, we did not see massive inflation across the board. Was there higher price? Were there higher prices in some places? Absolutely. Those tariffs did that. But overall, if you look at like consumer price index and different things, different variations of what inflation is and how you track inflation was still fairly moderate. So let's just remember that. But again, tariffs and the dollar are a second worry potentially to a bullish outlook in 2025. The last one, interest rates. I mean, interest rates have been higher. A lot of people feel them. You'll get a car. How's the housing market doing? And spoiler alert, not very good right now. Seen some very poor numbers because mortgage rates are up, ballpark 7%. We've said before that higher interest rates, they're a big time headwind for housing, and we're seeing that, but also for small businesses. So small business owners out there probably listening right now and nodding their head. Yeah, the business confidence has been lower, popped a little bit after the election, but if rates stay high, I bet it continues to come back lower. Higher interest rates are a headwind for housing and small businesses. So Sonu, what's kind of, if rates keep going higher or still go higher, how much will that upset the bullish thesis in 2025?
I think the reality is housing is not enough to send the economy to recession. We saw that in 2022.
Good point.
After Fed was raising rates, that was a massive headwind for the housing market, and it was a massive headwind for the GDP growth. But then because consumption is stronger, because consumption makes up 70% of the U.S. economy, and consumption's been running on the back of a strong labor market, strong income growth. That's still strong. That's what we think for next year. So I don't think it's enough high interest rates negatively impacting the housing market, even small business lending or even the auto loan sector, things like that, right? U.S. manufacturing investment. You want all that to be positive, but it's not going to be, I don't think it's going to turn the U.S. economic growth into a negative, right? So that I just want to be clear on that. But still, that's a potential worry, right? Higher interest rates. And if the Fed stays higher for longer, right? If they don't cut interest rates. Now, the good part of why interest rates are high is that everyone's expecting stronger growth. So it is for a good reason that we have higher interest rates. But, we do want some tailwinds coming from these very cyclical, rate-sensitive areas of the economy, like we talked about housing, investment, manufacturing, small business lending, all of that stuff. We need lower interest rates for that. Hopefully we get that. But rates saying higher is a risk.
Yeah, it's kind of one of the old be careful what you wish for, because if the economy really started to slow down, if the global economy really started to slow down and the Fed actively or aggressively started to cut, maybe that wouldn't be such a good thing because, again, the economy's slowing and jobs are slowing and maybe more layoffs start to come in. So listen, it's clear as mud, we're aware, but the reality again,
right?
Yeah, so the reality again is the U.S. economy continues to be like one of the strongest engines that are period right now. China is potentially on recession watch next year. Germany potentially on recession watch. Those are two of the largest economies in the world. So clearly, if they were to massively slow down, that could impact a lot of things. The reality, again, the U.S. is still quite solid. So with all of that, everyone, this again was the final Take 5 of 2024. Sonu and I really appreciate everybody listening to these. They're fun to do. We're going to keep doing them. I hope everyone had a Merry Christmas, Happy Hanukkah, great holiday season. Yeah, all that stuff, and have a happy New Year, a happy and safe New Year as well. We'll see everyone in 2025. This again was three. What exactly we call this?
Three things we're worried about for 2025.
There you go. I think three things we're potentially worried about in 2025. I think close enough for government work. And we talk about three things that scare us next year, but not quite scare, but worry us a little bit. So listen, everybody, thank you. We'll see you next year. Take care. Appreciate it.